Now, the Hayne Royal Commission into banking got stuck into the banks, and deservedly so. I mean, they were found to do a lot of things which are quite frankly not only illegal, immoral, but downright, dishonest in some cases. But some collateral damage actually has occurred because Commissioner Hayne actually had a bit of a go at the mortgage brokers, and I think quite unfairly in some areas. On the line now, I've got Paul Ahearne, who is a mortgage broker. Paul, welcome to the show.
Well, thank you, Harry. It's good to be on here.
Mate, it's a pleasure to have you on the show. Now, tell me, as I understand it, what exactly has Commissioner Hayne said about your industry?
Okay. Well, somewhere along the line, Harry, while Commissioner Haynes was reviewing the banks, he managed to chuck mortgage brokers under the bus for introducing clients to the banks as intermediaries. I mean, it's very interesting to note. I mean, the Australian consumer has already spoken here. Over 55% of loans arranged last year were through brokers.
Yeah.
And Australian borrowers are a canny lot. They don't go to brokers because it's not a good idea. They go to brokers because they get excellent service. And 55% of all loans last year were arranged through brokers. Well,
I mean, brokers make it a more competitive environment for the borrower, don't they? I mean, you got a whole bunch of, financial institutions say, look, I've got someone who wants to borrow $10. What's the best deal I can get for him? Isn't that the way it works?
That is exactly the way it works. We have a very sophisticated computerized systems which show every lender in the market. They go out to about 90 different lenders.
Wow.
The big four banks, plus Macquarie, plus everybody else out there, and a borrower comes in and we'll be able to assess and present perhaps the top 5 loans from 5 different borrowers, from different lenders, and the borrower can choose.
Well, you're not going to get that from a bank, are you? You go to the bank and they're going to say, well, here it is, here's the loan, it's at 5%, basically take it or leave it.
You're absolutely right. If you go into one of the big four banks, they've got 2 rates. They've got an advertised rate and they've got the best rate, and it's somebody else's discretion in the bank deciding which rate that you get. Whereas when they present on our systems, on our computer programs, we can actually have a look and say, these are the top 4 loans in the market. And it might be a rural bank. It might be Bank of Adelaide. It might be Bank of Bendigo. It might be the Banana Credit Union in far north Queensland.
Well, look, it doesn't matter where the money's coming from. It's money, isn't it? As long as you get it at the right interest rate, you should be very happy.
Completely. And, for a broker to operate, we work in a highly regulated, licensed environment with everything from, federal police checks right through to licenses issued by ASIC just to operate.
Now, one of his criticisms is the fact that the fee was paid by the bank to the broker.
Yeah.
Right? Yeah. Well, now, I mean, I have no problem at the end of the day. I mean, a fee gets paid. But what will happen now, as I understand it, is the borrower will have to pay you the fee. Could be a couple of $1,000s, right? Or the bank the fee. Now, all of a sudden, instead of this becoming a cost to the bank, in other words, they've got to pay you the fee, it becomes a revenue stream for them.
Completely.
How is this kicking the banks around if you're going to give them a bigger income stream?
Well, Harry, this might explain why all the bank stocks rallied and increased in value the day after the Royal Commission report was released, and why every listed mortgage broker, mortgage house, and the other large ones, all their shares absolutely tanked. If this goes through, this will be the end of the mortgage broking industry as we understand it, and the loss will be to the borrower. Absolutely.
Well, at the end, and also, I mean, the bank will say to you, look, you've gone to the mortgage broker, he said the fee's $3,000, we'll give it to you for $2,000. I mean, that's what they'll do. And what they'll take the fee. Now, the trickle commission thing is something that I must admit, I've never been keen on trickle commissions because I think it's open to abuse. So how do you feel about that going? Do you think that's a good or a bad thing?
Well, it's very interesting. I mean, it's the same 100 cents. So you either get your commission up front or you get your commission for continuing to maintain the loan and leaving the loan where it is. So it's actually not 2 commission payments.
Oh, I see. I thought it was both.
No, it's the same amount of money spread over a longer period of time.
Okay. No, I see.
So the issue is, of course, that a mortgage broker only gets paid for successful loans, so they have to generate some recurrent revenue so they can keep their doors open.
Sure.
Bearing in mind, this is a service which is free to the borrower. If I go and get a Commonwealth Bank loan through a broker or a Commonwealth loan from the Commonwealth Bank, it is the same price loan. The difference is on one of them, the Commonwealth Bank pays a commission to a broker, and on the other, they keep it.
Yeah, okay. All right, well, there we go. Well, look, at this point in time, I mean, there's a pretty aggressive advertising out there on behalf of the broking industry, which I think makes a lot of sense. I mean, have you had any feedback from that?
Well, I noticed that Macquarie Bank, of which something like 60% of Macquarie Bank's loans come through the broker network, they're now putting their shoulder to the wheel, and they're stepping up, and they're saying this broker network, this broker distribution channel, should survive for the best interest of the Australian borrowers. If we just cast our mind back to when Aussie Home Loans started, John Simon, with the old Wheel Saviour, he changed an industry 20 years ago. He was so good at what he did, the Commonwealth Bank came and bought his business so they could own it.
Yes.
So, I think the Aussie Home Loans changed the lending market back then, and what's happening now is an unravelling of that.
Well, this sounds like a retrograde step by Hayne. Do you think he didn't think this thing through clearly?
I think he just got a bit sideswiped. Commissioner Hayne would only have to look at what happened to those shares, with the banks rejoicing and champagne corks up and down Collins Street and George Street after this, and the broker market being absolutely murdered on the capital markets. So I think he just got it wrong.
Do you think that this will go through? I mean, Labor Party said they'll put it through in its entirety, which is typical of them. I mean, they don't think through too well anyway. But at the end of the day, do they realise what they can do to some of their own voting constituents? Because I guess a lot of people who go to brokers actually come, from the left side of politics.
Well, they certainly do, and they need some assistance to work through the minefield of trying to get a loan done.
Yeah.
I think that there's a bit of dust to settle on this yet. The banks will fight back because they would like to own the channel. They don't like the concept that someone can come in and they are offered. This sort of keeps everybody honest. This gives a great deal of transparency. I think it's got a way to go before this gets through. Right now, in an election year, everyone's saying we're going to implement, but I think this has got a way to go before it settles. And I'm very pleased to see people like Macquarie, who are not without resources, putting their shoulder to the wheel and saying to everybody, hang on a second, before you kill this distribution channel, let's just have a look at the loss here.
Well, we don't need the banks getting another revenue stream at the expense of competition, which is what this is doing. It's going to close competition now and give the four banks even more money. Given what they've done to this community and this society, this country, over the last 20, 30 years, they should be broken up a little, in my opinion.
I would be inclined to agree. And let's remember, Harry, every one of those banks is operating with a government guarantee supported by the Australian taxpayer.
That's right.
All deposits are now guaranteed under a government guarantee to the bank.
Up to about $500,000, isn't it? Half a million? Yeah.
That is correct, yeah.
All right, Paul, lovely to chat to you.
And you as well.
And anything else you'd like to add to this conversation?
No, just I think a final point is this. The existence of brokers means that borrowers get access to cheaper loans.
Yeah.
Not more expensive, cheaper loans. You use a broker, you say, show me the top four by cost and by feature. You don't get that if you walk into the Commonwealth Bank.
No, well, you don't. And you won't get that if brokers go, you certainly won't get that with a big four. They will just go ahead and set whatever rate they think they make the most money out of, and the rest of us can just go and whistle, as it were.
Well, I agree. They didn't call a Royal Commission just for their good health.
No, you're very true. All right, Paul, thank you very much. Good luck. Have a lovely weekend.
Cheers.
And we might talk to you when this thing either goes through or gets killed.
Happy to comment on it.
Okay. Thank you, Paul. Bye-bye. Bye.
Bye.
Bye.